Welcome to Tower Talk Business Radio, where we bring you conversations with the top business minds on Long Island and around the nation every week. Featuring expert consultants and small business owners who have found success but are also willing to share their top tips, failures, and give gritty, matter-of-fact advice based on their firsthand experience. Now, let's get down to business on Tower Talk Business Radio on the voice of Nassau Community College, 90.3 WHPC.
Hello and welcome to Tower Talk Business Radio, powered by the Nassau Community College Foundation. My name is Ray Schwetz, AVP of Business Banking at Giovia Financial Credit Union, and we're focused on being the premier resource for business and entrepreneurship. We bring you weekly business advice, tips, tools, and services that help you grow your business. Plus, we interview the top business leaders in the industry, and I'm very excited about today. Helping provide us with business empowerment is a leader in business evaluation, mergers and acquisitions, pension and consulting, and tax advice. Bonnie Am. She is the ATAX franchise developer. Am I pronouncing the name correctly?
Correct,
ATAX?
Bonnie Am.
Bonnie Am.
ATAX, correct. Yes.
All right, very good. Welcome to the show, Bonnie.
Thank you so much. Yes, I'd love to be with you. And this is a beautiful, beautiful place. And I'm super impressed. I was telling Sean, getting the student involved at such an early stage is a wonderful, wonderful experience.
That's one of the things that's great about this station is that we work with the volunteers, the students, and really gives them the opportunity to have a professionally run studio. We're Long Island's best radio station, so we're very excited about that. And we're very excited about having you aboard because I got to tell you, your resume is extremely impressive.
Oh, thank you so much.
There are a lot of letters after your last name.
Thank you.
You know, you're a CFP, you're a CFA,
right.
So a lot of designations. So obviously, I'm working with someone here who is
love to learn. How about that?
Very loves to learn, and you know that's a great thing because you're learning every day, right?
Yes, true.
So yeah, again, impressive qualifications. How did you choose to kind of get into this career?
Well, you know, sometimes it's not by choice. You just kind of fall into it too. I started to do investment, and somebody said that I think you can do pension. It's not that hard. Come with me. You know, I want to do a presentation, and I came along. And then, believe it or not, you know, I got my first client just because it was in 2008 and they lost lots of money. Oh, yeah. And I don't know much about pension then, but I do all the research I can. And then I wrote to them and said, would you be interested in me working with them? And they said, yeah, because we lost some money. We want somebody to come in and assist. And not only that, we want you to help teach financial wellness. And guess what company this is? Panda Restaurant Group.
Oh, wow.
Huge company, right?
Yes.
Well, then they weren't as big as it's today, but they are very interested in employees. So they said, I want you to come in at least once a week to educate the people, the employees. And they have offices all around the state. So I need to fly, I need to travel. And the interesting thing is like you get to meet different levels of people. Not the people who are super, super rich, but also the people who was like serving, who was managing the cashier. And they understand how difficult it is just to make ends meet.
Yes. And I would also say this, you are very relatable. You know, as people could talk to you all different levels. So CEOs to folks like me who are just earning a paycheck.
Yeah, I also volunteer. Not volunteer. I'm an on-demand personal financial consultant for the military. And you see another aspect. These people who work really hard, they leave their hometown, they move somewhere else very, very far away. And before they leave, and they have a special occasion where they bring us in to give them financial wellness education, like budgeting or whatever, give presentations and talk to them about issues and problems that they have in life. And it really hits you because you feel that it's not helping one person.
Yeah.
Okay? When you help them, you know, you're helping the whole family. You relieve all the stress and all that. And that gives me more satisfaction than anything.
It's so true because, finances, unfortunately or unfortunately, I mean, we're pretty lucky in the U.S., but finances is everything.
It's complicated.
Yeah.
There's a lot of math to it.
It affects everything. So who is it that you like working most with, being that you have that range of different, clientele or folks that you work with? Is there a specific type of client that you really like working with more than others,
I would say a lot of times, the clients that come to me are referrals. Mm-hmm. And also because of my broad knowledge base, I see a lot of tax attorney and estate planning attorney coming to me because they might have some more complicated issues that they want to resolve. Like a lot of times when somebody passes away, it's not just the family itself, but they might also have a business and you need to evaluate the business. And not only that, there might be different like levels of family members fighting over the same estate, and it gets very, very complex. There's the partner, they're the other side of the family, the wife, the kids, and many level. So it's very complex. So they want me to come in to at least give them a good value of, let's say, the pizzeria, the hair salon, how much that's worth. And because of COVID, a lot of things being affected too.
Gotcha.
So you need to do a lot of cleanups.
Yes, I can imagine. Oh, wow. Now, I know you also you have expertise with regards to the different business entities, and that's something that I'm a business banker by day, and
Sure.
that's something that comes up quite a bit. Is why would I want to go with one business entity versus another?
Interesting. Yeah.
So, and
Yeah.
I do find it very interesting the
Very
way that those
interesting.
are structured,
Yeah.
and that affects how you're taxed, correct?
Oh, sure. Okay. So it depends on the stages of development and what kind of protection you want to get and what type of business. Okay. So let's say you're just starting off and it's it's a very simple business. You don't have a lot to declare. So you might want to just do a Schedule C because you don't have to pay for registration of a corporation. But then when you have a corporation, you have additional protection, which is liability protection. So if there's corporate debt, somebody's suing you, or that, at least you don't want to be personally liable. So that's the big thing. So you want to know, what's the liability impact. And if you want that extra protection, then of course you have to pay extra money of that. But there are two different types of corps, C Corp and S Corp. C Corp, double taxation. So you pay the corporate level tax, and then when the money get remitted, you pay again on the personal level. So double taxation. People might not like that, so you pick S Corp. S Corp, it's flow through. So whatever the company tax, it's a K1. It's kind of like, like a W-2, but you pay it on a personal level, so you don't pay it two times. So a lot of people like that, but why do you pick C Corp, right? So S Corp, you only get like 100 shareholders. Okay, so it's like a limited size, in other words. If you want to raise capital as your company reach a higher level and you want more investor money, so 100 might not be enough. And you might want multiple share classes, okay? So passive investors, more active investors, so you want a more complicated setup, then you go with C Corp.
That makes sense, because if you're going that big, then obviously the government wants to take a piece of that too. but it does protect you.
It has a more complicated structure, and you need more meetings. You need to report more things. Okay, so it's also protecting the investors because you need to declare more your revenue on a regular basis and so forth.
Yeah, and for folks who are doing, like, for example, my wife is a speech language pathologist, so she does, she works full time in the school districts, and then she also has a
Additional
business
income.
Yeah, she's registered as a sole proprietor now. So somebody who's doing contract work, why would they want to become a sole proprietor?
Well, you want more money.
That's true. Yeah.
And then there are a couple of ways to get paid. You can get paid by W-2 or 1099. So there's a difference. W-2, you need to pay employment income taxes. The business side, so if I write you a W-2, I need to pay 50% of your employment income tax, and you pay 50%, okay? But if you're 1099, you pay 100% yourself. I don't have to pay, okay?
Got it.
Yeah, and then the other thing is, like, if you're a W-2, if you work over X amount of hours, they have to pay you extra, for overtime. But if you're 1099, the company is not responsible. So you have more decision who you want to work with, how many hours you want to work, but you pay a little bit more on the employment taxes.
Yeah, that makes a lot of sense. Now, when it comes to the Secured Act, I'll be honest in that I'm a little bit ignorant, but I'd like you to discuss that a little bit for me.
It's basically they want people to save more, and they want to make it more flexible. And as you know, that people are retiring later and later, also they're living longer, so they need to change some of the rules. In the past, the RMD, which is called required minimum distribution, is at age 70 and a half. So they want you to start taking the money out at 70 and a half, because the money that goes into your 401k account is tax deferred, meaning you don't pay any taxes on the income and growth. And there are two ways of doing it in the past anyway, okay, which is like anything that goes in are not taxed until it takes out when you start withdrawing. So the government is not getting anything from you, right? Because normally you pay taxes on it. So everything's deferred. So at one point in the time they want, okay, 70 and a half is, you better start paying me some of it back, right? But then because people taking longer to retire and the longevity issue, so they want to defer it. And the Security Act is going to change it from 70 and a half to 72 and 73 in 2023, and then 2033 is going to be I think 75. So they're going to move the distribution later.
Well, and that kind of makes sense to me. You're listening to Tower Talk Business Radio on the voice of Nassau Community College, 90.3 WHPC. I'm Ray Schwetz, along with Denisha Balsindel, and our guest today is Bonnie Am, ATAX franchise developer. So I want to talk a little bit, I guess, from the business standpoint. Having a corporate retirement plan. Yes, we're trying to encourage people to save. Why would a business set up a corporate retirement plan?
Oh, there are multiple issues. Like I would say, number one, it's getting very competitive, and you have to have a plan, okay? Otherwise, it's going to be hard for you to retain employees and hire employees because it's a benefit that people are actually really looking for. Yeah. And then number two is like when you do a 401k plan, the contribution part, like what I said, it's tax deferred. So it helps them save money. And the amount that you can put into 401k is like $22,500, and you're 50 and above, another $7,500. It's a lot of money that you can put in that's tax deferred. And from the company side, the match is the money that they match you into your 401k plan that has no, they don't have to pay Social Security and Medicare taxes on it.
Wow.
So that's a saving in that respect. And if you think about it this way, if you want to promote growth, help people retire, this is the right thing to do anyway. Forget about the tax angle.
I agree. And you know what? That matching program, that's great because that's really a win-win. And I always tell folks, who talk to me about their retirement, maximize whatever it is that the employer can match you with, because that's pretty fantastic. Now, looking again from the business standpoint, and this is something my wife talks with my accountant about, with regards to different expenses that the business incurs. And how that's handled. So obviously there's travel, entertainment, there's other expenses. How does this kind of figure into things?
You need an accountant. Sorry.
Yeah.
It is pretty complicated, but let me just put it this way. When you travel and lodging, okay, I'm assuming that you're doing business travel, okay? That's 100% deductible. But meals now, meals has always been just 50%. In the past, you can probably take your favorite customer and then take them to like a game show and all that, and then that's free. Now, that's not deductible anymore.
Yes, I've heard that from, I'm friendly with title insurance people, and they used to take people out and entertain them that way. Now
no more.
Not seeing any of that. Which I guess there's reasons for that, obviously. But this is all a lot for a business that's kind of already running. Now, do you do a lot of work with startup businesses, people who are just starting out?
Well, startup, you do have like a $5,000 deduction, okay? Assuming that your startup expense is no more than $50,000. Anything more than $50,000, you probably have to do some type of like amortization, like it take 15 years for you to depreciate your startup expense.
Gotcha. Well, that's good though. That's good that there's some way, because when you're starting up, obviously that's the most difficult time.
$5,000, the free money that they give you to offset this, it takes longer for you to depreciate. But then whatever you have startup, expenses, you record it. I mean, it's part of your expense. Of course, you can write it off.
Yeah, and that's something that I think that some startup businesses struggle with because it's something new to them, and that's something that obviously there's an education process there. We have to tell people, hey, if you're starting an LLC or a corporation, you have to act as a business entity.
Oh, I want to say one more thing is that your credit score is very important. Your personal credit score, not just a business credit score. Particularly if you're starting up a business and they don't see any of the business income coming in first. So what are they going to look at? They are going to look at your personal credit score. So make sure that it's at least 700.
Yeah.
So don't be late on your payment and don't spend too much, even if they give you a lot of credit lines. So don't use it all.
That is a very good point. And it's a lot of folks get that wrong because they're like, oh, I want to establish my business credit. Oh, this has nothing to do with me. It's my business. And there's always a little bit of a struggle to get folks to understand that really when it comes down to it, who is the primary decision maker for that business? It's the
they look at your cash flow.
Yeah.
Let me just put it this way: they will look at like 3 years of financial statements, okay, and they want to look at your business plan, and then also they want to look at your cash that comes in, and then your debt, and then the cash versus debt ratio, and they want to make sure, of course, you have enough money to pay them back. And sometimes they want you to buy insurance because, look, I want to make sure my money is safe. You buy a house, they want you to have mortgage insurance too. or rental insurance, right? So they want to have insurance. And if it's for a small company or like any company, if they want to bid for a government program, government want insurance on the contract. Make sure that it will be completed on the terms, on the conditions that's written on the agreement.
Yeah, that is great advice. Now, do you work with any businesses that are looking for certifications, like, for example, MWBE or any of that type of work?
Well, there are, not exactly, but there, because I'm teaching at SUNY, I'm actually teaching business financial wellness class right now. I mean, every Monday, 2 hours. So, I mean, we have a lot of discussions. And the nice thing about having like a whole group of business owners in one big class is like they all share what they know, what are the questions. And you hear about all these like, oh, okay, there's like a Westchester grant. Did you go and apply?
Oh, wow.
So that's good, and it's not a lot of money, but $10,000-$15,000 is free. That's free, and if you like what you said, certain type of certification, you get additional grants for whatever. All that sharing really helps.
Yeah. Now, how did you wind up becoming a professor at SUNY, an associate professor?
That was really interesting. I just went to Westchester, one of the networking occasions, and I just dropped my card, and then I got a call.
Oh, wow.
I mean, it's like really hard to believe, right? Normally you call them and say, wait, look, we don't have a position. We don't have the time. You're not qualified, whatever. So I asked, like, how come you picked me? And said, well, we have a need and you happen to be there. Right time, right place.
Wow. And you know what? It's great that you did that you pursued that. I always tell folks, you want to ask for the business. You want to, be available. You want to put yourself out there.
You never know. Really, you never know.
You never know where that's going to come from. So now, why don't you tell us about a time that you worked with a client and just so that this way folks can kind of relate to the work that you do? Because some of it is very, honestly, it's very confusing.
Very confusing. Yeah.
So can you tell us a time that you worked with a client and you were able to help them?
From multiple perspectives, some of them are so aggressive, it goes the other way. Because like what I said, I used to work for Panda Restaurant Group, and then some of them come in and then said, I want to save like 60-70% of my cash flow. I look at them, you know what? You need some spare cash.
How are they going to live?
Exactly. Okay. So, I mean, there's like this number perspective, and there's also like the more like how do you connect with the client and help them manage their expectations. That's big, okay?
Yeah.
And I think numbers is just one aspect of it, and you have to work with somebody who's committed. If they are not ready, you're just basically wasting your time and their time because it's not going to get done. It's not going to get done properly. And I want to say one more thing is that a lot of people think that they get it done, the financial plan or whatever, they get everything done and I'm done, the homework is done. I'm saying no, it's not done because things change. Like let's say you own a business. 10 years ago, the business worth $50,000, let's say. I don't know. But like 10 years later, the business grown quite a lot and you bought business insurance on that company and that was only $50,000. Now it's like $1 million. Who knows? So whatever you had planned is no longer relevant. So you need to always update and grow.
Yeah, you always need to adjust that because there's different cycles of the business. You're starting out, as you're pointing out.
Yeah.
But then you grow, then you expand.
Then they expand, right?
Then there has to be an exit strategy at some point, unless you want to do this forever.
Exit strategy is very, very important because a lot of business owners don't realize that. They think that the best thing is like to minimize the amount of tax that you pay to the government when you want to sell, and they look at, come on, what am I buying? It's like it's not going to work. And then if anybody wants to buy your business, they want to look at 3 years of financial statements. So if you show me 1 year from $200,000 to grow to $1 million, how does it happen? I mean, when I buy it, is it going to continue on? And the other thing I want to say, very, very important, is that business owners, a lot of them work in the business. When they go, there's nothing because they're the front person, they're everything. They do everything. And what am I buying? So you need to be able to transition to your staff. So when you're gone, they can take care of all the clients, run it the same way, just like a very big company.
Well, I would think that that's also a reason for businesses to understand the true value that they offer, the true value of the business, and to get an evaluation.
Right. Yep.
Obviously, that comes up sometimes with loans, with business loans and that sort of thing. But I also think just from a planning standpoint, you need to know what you're working with.
Totally.
Are there any stories that you could share about some interesting business evaluations that you've done? I'm sure there are a few.
How about I think more interesting besides business evaluation, I think more interesting is like tax attorneys, like what they come up to help you save taxes. Amazing. because when you do evaluations, you discount the business value because of the risk that you're taking. Okay, so I mean, it's a small business, you're not making a lot of revenue or whatever. So we always discount it before you report it to the IRS. Okay, so they think of different ways of helping the business owners move the money out by lowering the value of them. This is a completely different thing. Okay, they want to lower whatever you put in the LLC. It's less than what the dollar value that it is, and they do a lot of risk and analysis, and there's sometimes they use like options. So instead of like transferring the 100% of the ownership of the government of your company into your estate plan, they transfer option contracts of your company. So options is not 100% of the value of the company, but it's a future value. It's a 3-year option. So in 3 years' time, you might be able to use the option to buy the company. But what you transition is like the current value. Mm-hmm. So you already managed to move it out, okay? And because it's an option and all these like risks and all that, you're able to discount it. So they have a lot of tricks in there helping you move your estate in today's value and then figure out some type of risk to discount it even more so you pay less to the IRS. Very smart.
Very. You're listening to Tara Talk Business Radio. Our guest today is Bonnie Am, ATAX franchise developer. My name is Ray Schwetz on the voice of National Community College, 90.3 WHPC. Now, what sets you apart from others who are in this field? Because obviously there's a lot of different business advisors.
Right. I think my perspective is I understand the individual side, and also I also understand the business side very, very much. Like even in M&A professional, not a lot of people actually know how to run business evaluations. But to understand the business, once you do the business evaluation, you know it as well as almost, I could say, the owner. You need to know how to forecast the future, and you need to look at the past numbers, and if any discrepancies, to fix it. And you need to normalize the business. After you did all that, it's a lot of work, obviously. Once you did all that, you said, I think I know how you run your business too. No, it's so in-depth. It's so in-depth. And then you need to talk to the business owners to be able to forecast the future revenue growth. Otherwise, you wouldn't be able to project the value of the company. So once you get done with that, you kind of know where the business stands. And if you kind of know what the future of that particular category of the business, you know what's the potential. And then the next thing is to meet up with the buyers, like what they're looking for, and then whether they got what they need. And then you talk about the finer details.
Now, the work that you do is very experiential. You mentioned referrals. Obviously, that's one way that you're getting business. But how also do you get folks to just understand what it is that you do? How do you get folks to understand your value proposition, what you bring? Well,
I think like today, I would say, just like another way to bring your experience to the public, because it's so complex. So they're not gonna know until they have that need. So I think that's very important. And also write books. I think like books and teaching also very important, because I learn from writing and I also learn from teaching, because I get to meet a lot of different types of people.
And let's talk about your books. So you have 2 books. So I'd like to learn a little bit about those. I haven't had the opportunity to read them yet, but I'm going to order them. And
Thank you very much.
Very excited to read them.
Because, like I said, I have a lot of experience working with people from different backgrounds, and I understand that people have no time to read, and then it's like too much to read too, and then they just want you to help me solve the problem. Okay, so I have this issue here, so help me. Tell me what I need to do to resolve that issue. So when I teach the classes at WCC, there are like 10 classes. So, those like 10 main topics. So what I'm going to do is like take those topics and ask the top 5 questions that people have on each of those topics. And then instead of like telling you, giving you chapters and chapters, I would say, hey, this is what you should focus on. Like if you ask me this question, I'll give you this answer. But I want to make it fun, so I put lots of drawings to illustrate the answers. So you don't feel as like you're reading a heavy-duty book. You feel like, okay, I'm actually laughing and enjoying a little bit, because every topic before you even read inside what happens, I give you a joke. So you'll be able to enjoy it. And
I could definitely tell that about you. And again, that's what I think works, because when you make it relatable, then it translates into, all right, well, those are the abstract ideas that are important, but how does it apply to me? Which is very important. I'm sure that given the complexity of the work that you do, there's a lot of misconceptions. What are some of the misconceptions you commonly hear about your work?
Well, I won't even say misconceptions. I just think that they don't understand it, and they pretend they understand it, but they don't understand it.
It's so hard to admit sometimes that we don't know something, and you're afraid to put the trust out there that I don't really know, so I have to depend on this other person.
That's actually before you do anything, it's the trust, whether they can relate to you. That comes before anything, because even if you show them the numbers, they don't know how you come to the number. So they basically is almost all trust.
Yes.
And then you need to understand the needs. And the needs today is so complex. It's not just one person, it's the whole family. And then how complex today's family is. Like, kids, it's multiple levels. So they have to be ready. They have to be committed, and they have to be ready.
And that trust does definitely build that readiness in them to then be able to digest, okay, this is what she's telling me, and this is how I need to apply it.
Not only that, you have to meet up with different family members. So if I meet up with the wife, I need to meet up with the husband, make sure they are on the same boat, okay? And then because they asked me to plan some of the money to give it to the kids, or let's say they want to transition the business to their kids, and then they want to make sure the kids able to buy it, like how many installments, and if they have more than one kid, so how do you be fair? It's a lot. It's not quite so simple.
Now, if there was one thought that you wanted to leave our listener with, what would that one thought be?
You should always learn. And then the one more thing is like Einstein's eighth wonder of the universe, compounding. I have to say, it is really, really true, okay? So let me just tell you how it works, okay?
Yeah.
The rule of 72. 72 is if you divide the percentage of return into 72, that gives you the time that the number of years it takes to double your money. So if I divide 7% return into 72, 10. Let's say it's 10. So every 10 years, your money will double. Let's say you're very good at saving, and at the age of 50, you got $1 million. So another 10 years, you do nothing, 1 million becomes $2 million. So 60 years old, 1 to 2, it's a huge amount. But let's say you start earlier, okay? Instead of you starting at 30, you start at 20. 2 becomes what? $4 million. 2 to 4 is a huge amount of money. I don't have to tell you that. So I'm just saying is that if you have your life ready, if you start having like some savings, start early. Don't tell me like, okay, I'll start at 30. Oh, I have all this going on in my life. I want to do this and that. I do it at 40. The later you push it, I'm telling you, you're working the reverse of compounding.
Yeah, I would agree. That is sage advice. So how do we find you if we're looking for you, Bonnie?
Oh, I actually try to Google myself. It's not hard. You can go to my LinkedIn, and you can go to my website, pensionmaxima.com. It's probably not hard. You'd be able to find me, and just email me, and I'll help.
Thank you so much, Bonnie. We really appreciate you being here today. A person doesn't know how much he has to be thankful for until he has to pay taxes on it. And don't be audited. We want to thank you for being with us. My name is Ray Schwetz, along with Denise and Boston Hill, your co-host and producers. This is an NCC Foundation production. Visit nccradio.org for more information. We're available on Odyssey, TuneIn, iHeartRadio as a podcast on iTunes, Android Podcast, and Spreaker. This has been Tower Talk Business Radio, powered by the National Community College Foundation on the voice of National Community College, 90.3 WHPC.